This is Think Smart with TMFG, the weekly podcast of what's newsworthy and relevant to everyday Canadians. I'm your host, Senior Financial Advisor Mike Connon of CI Asante Wealth Management. Welcome to Think Smart with TMFG. I'm Mike Connon. This is Carlo Cancino, Senior Financial Advisor with CI Asante Wealth Management Limited. Today, we are going to talk about, I guess not everyone's favorite subject, but disabilities. How often do you run into clients that are, I'm not going to say even disabled themselves, but they have family members with a disability?
No, Mike, that's actually a really good question. And it comes up far more often than you might think. And it isn't necessarily about a family member. It might be something that someone's dealing with already. You know, some people have stopped working for a while, or they may feel like they're going through a health issue. Some may be on LTD. But, you know, when they think that they're on have some sort of disability, they never think about the disability tax credit. And that's something that you should often consider.
It's funny. It's overlooked many times, and the disability tax credit is a very different thing than just being disabled. There's many disabled people that we see that do not get the disability tax credit. And some people who are getting disability as an income do not get the disability tax credit. I think everyone thinks they're all joined together. So as soon as someone says, hey, you're disabled, everyone always to each other, and governments, insurance companies, everyone discuss everything and decide you're disabled. It doesn't quite work that way. So let's start off with the first question. What is the disability tax credit?
Yeah, I think that's a great place to start, just so people can understand what that actually is. And for those of you that don't know, the disability tax credit is a federal tax credit for Canadians with a severe or prolonged impairment. It's definitely not a monthly payment. And that's something that we see, or a common misconception that people have. They think it's a monthly payment, but actually it's a tax credit that just reduces the amount of tax that you owe.
Yeah, because people get very confused. And even I was a long time ago, ODSP is what Ontario Disability.
Yes.
Do they get ODSP? Well, some people get ODSP, but that doesn't mean you necessarily get the disability tax credit in there.
Yeah, no, in order to get the tax credit, you need approval. You need to fill out what's called a T2201 to apply for it with the CRA, but you also have to have medical certification. So you do have to see a medical professional to provide you with the note that says, yeah, you should be eligible.
And you got to remember, this is a tax credit. So a credit is different than a tax deduction. It's not a deduction, it's a tax credit. And you do get the disability tax credit. I believe the amount they put is $10,138 is your disability amount. Mm-hmm. And then when you do your tax returns, I think you get about 15% of that back. So when you do the numbers, you're going to get about $1,500 back a year from having that disability tax credit. But again, it's regardless of your tax bracket, this is a tax credit.
Yeah, definitely a tax saving, not necessarily a payment. Well, also what we have to understand is that when you are eligible for the disability tax credit, it does provide you with some access to other disability-related programs, Registered Disability Savings Plan, the Canada Disability Benefit. So having access to that disability tax credit opens up other avenues.
So let's go down this road of a severe long-term disability. And the problem, well, it's not even a problem. It's to get this, the doctors have to fill out a lot of paperwork.
Yes.
Form this T2201 used to be a very simple form that was about 2 or 3 pages long. Mm-hmm. Now it's a bit of an extensive form. So one thing is doctors don't love filling out paperwork. It's just so some people may actually be charged to fill out this form because it's not something they want to do. And also what enables them to get that disability tax credit, it seems to have increased over the years. People have to have a very severe disability. And it's not just losing hearing in one ear or losing eyesight in one eye. If there's some obvious things that do get it. I mean, one is if people have any blindness, they become legally blind. Mm-hmm. Usually when you go to those things, that would definitely impair a lot of different things. If people get a diagnosis of, let's say, dementia or anything like that, that would generally trigger this to go into place. So many people, for their, let's say, parents who have gone into a home, the trick is to get the doctors at the home or their own doctors to get this form filled out and allow them to take advantage of that disability tax credit.
No, you're right. And I think that's important for you out there to know. It's not necessarily a diagnosis with a certain impairment. That diagnosis or that impairment that you have has to dramatically impact your daily activities of life. And you were talking about that earlier, but if it impacts your ability to walk or dress or feed yourself.
Yeah, it's not really a broken arm.
No.
So this is and that's what people get very confused at. They have something broken and they're temporarily going to be in a situation that does not qualify you for the disability tax credit. So let's talk about what can open up financially from that.
Yeah, there's definitely additional benefits that you can have on top of, what we talked about already with the tax savings. There are things that you are eligible for. Like I said, it's not a payment. It is taxes paid. Another benefit it provides is if you don't have enough income to qualify, or at least the income taxes payable is very minimal, you can transfer that tax credit to either a family member who's supporting you to a family member who's been supporting you. So that disability tax credit can be utilized by somebody else.
And again, it's many times used for parents that are in a home where they don't have any income that they're paying tax on, just because essentially they'll have enough write-offs in there if they can get the tax credit.
Right.
Again, it will help anyone who it goes to.
Another thing that you can have the benefit of is the registered disability savings plan. We're not going to get into too much detail in this particular podcast, but that is definitely a program that you should take advantage of, a type of account. There are many benefits to it.
And the other thing to remind people is once you get this, it's from when people got the disability.
Right.
It can be carried backwards. So a lot of people forgot and they said, I've missed this over the years. If you have a family doctor that's been a doctor for many years and say someone had a diagnosis of things that was 5 years ago, you can go carry that back and have that put on the tax returns for the last 5 years. The one thing that stops people, which shouldn't stop people, is you don't have to do anything from a tax point of view.
Right.
Once you get this disability tax credit, the government will go and adjust all your tax returns in the past. So you don't have to fill out anything. You don't have to do anything. Once they receive and they prove this disability tax credit, they start from the time that you started. It can be carried up to 10 years back. So whenever that started, they will adjust all those returns from you. Because it's a tax credit, it doesn't really affect anything else because it's not affecting your tax brackets or anything like that. It's just you get that amount for every year that it was applicable to. We get people that are very surprised. I've had clients get $7,000-$10,000 back just from going back and said, I never realized I had this disability tax credit was available. We'll send in the paperwork from the doctor, and all of a sudden they'll get a check from the government 6 to 9 months later.
And that's a great thing to point out because literally if they can go back and make and add the disability tax credit retroactively to other tax returns, it's literally money back for you because it is a tax credit and it's just paying you back the taxes you paid. So Mike, I think where we go from here, we should understand why the disability tax credit approval is only the start to having this financial conversation.
Well, this starts something called RDSPs.
Yep.
So RDSPs are registered disability savings plans. And again, I won't go into too much detail on them because it could be a whole podcast in itself and everything can happen to them. But there's tremendous advantages to put money into these, particularly for people who don't have high income. And the government, it's the best match. You talk about RSPs. The government match is basically almost like a 3-to-1 ratio. If you put $1,500 in, the government will put $3,500 in.
Yeah.
So not quite 3-to-1, but it's pretty close.
Yeah, it's pretty lucrative. And again, it's based on, it's income tested. So in reality, if you have a low income, you could really be taking advantage of the government benefit providing you that grant.
And see, the key is it's based on family income.
Yeah.
So at first, it may not be in a situation where you think this is much because it won't be the same type of benefit. There's still a great benefit, but not this extreme measures. But the trick is once someone hits 18 years old, they become their own family. Right. So if you have someone who you've started in this, all of a sudden hit 18 years old, they're now a family unit. And a lot of 18-year-olds with a disability generally won't have income that would be over these thresholds, and they can get a lot of the extra bonuses that are attached to it.
Well, that makes a lot of sense. Are there any other benefits to having a registered disability savings plan, Mike? Are there opportunities for any estate planning with the RDSP?
With an estate plan, and if people have disabilities, they use something called Henson trusts in estates. And what that is to do, it's to protect your ODSP. Because you're only allowed to have a certain amount of money before ODSP gets discounted. So a lot of times when people have a disability in there, they can go and have money left them in something called a Henson trust. And that makes it so they can continue to get their ODSP benefits, which is again separate from this disability tax credit, but it's things to be aware of if you're dealing with a disability.
I think that's a lot for today in terms of what we wanted to discuss with our disability tax credits. We are going to do a part 2 of the other benefits that you could have for somebody with a disability, but we definitely wanted to break it down so that families can hear about it and fully understand it.
Yeah, the one thing is if you're lucky enough where you don't have to deal with any of it in yourself, if you do have, you're going to know lots of people who deal with this, and a lot of people just aren't aware of these benefits that come from the government. And it's every time you can find an advantage out there, particularly for someone who's struggling with a disability in the first stage, if they can get some type of advantage to help out to deal with that, it's always a good thing to do.
Yeah, and I think one of the most important things to note is don't self-disqualify yourself. If you are going through something and there is some level of disability or you have a condition where your daily living activities is being impacted, have the application filled out. Go to see your doctor to see if this is something that you can take advantage of, because there's no downside.
That brings us to the end of another episode of Think Smart with TMFG. Thank you very much for joining us. Thank you for listening to the Think Smart podcast. I'm Mike Connon with the McClellan Financial Group of CI Asante Wealth Management. Don't forget to subscribe to Podbean, Apple Podcasts, Spotify, or YouTube, and leave us a review. For more insights and resources, visit tmfg.ca or follow the link in the episode description.
This program was prepared by Michael Connon, who is a senior financial advisor with CI Asante Wealth Management Limited. This is not an official program of CI Asante Wealth Management Limited, and the statements and opinions expressed during this podcast are not necessarily those of CI Asante Wealth Management Limited. CI Asante Wealth Management Limited is a member of the Canadian Investor Protection Fund and the Canadian Investment Regulatory Organization. This show is intended for general information only and may not apply to all listeners or investors. Please obtain professional financial advice or contact me at 905-771-5200 or visit tmfg.ca to discuss your circumstances prior to acting on the information presented.